Hey guys, let's talk a little bit about being self-employed because a lot of people don't realize this. You could make $1 million a year and still get denied for a mortgage. Yep, here's why. Your bank or lender doesn't care what you make. They care what you tell the government you made. Not what's in your bank account, not your lifestyle, just what's on your tax return. And that's where a lot of self-employed people run into problems. Whenever I talk to self-employed borrowers, the conversation starts the same way. Awesome, you're self-employed. So what'd you make last year? And the answer is always complicated. But let's look at it from the underwriter's perspective. It's not about gross income. They go straight to the tax return. They look at your expenses and then your net income, what you actually pay taxes on. Self-employed people want to make as much money as possible while paying taxes on as little as possible, which is totally understandable. Those write-offs, those deductions, they reduce the income the lender can use. So that's why self-employed borrowers get denied, or at least that's why many of them get denied. Another thing people forget, the loan officer and lender you work with matter a lot. Most people shop around only by interest rate, and I get it. It's the only thing you're taught to look at. But here's the truth. If your loan officer can't analyze a tax return correctly, the underwriter will use the most conservative income possible, and that can kill your debt to income ratio fast. When I used to work for a retail lender, or even a bank, most LOs would just upload their tax returns to software or send it directly to the underwriter and let them to decide. The problem? Many loan officers don't actually know how to read a tax return, and underwriters will always take the lowest and safest number. You need someone who knows how to maximize your qualifying income, understands guidelines, and actually advocate for you. Let's break down the basics. There are two main types of self-employed borrowers. Sole proprietors, they file Schedule C, simple, filed on your personal return, no W-2s, no paychecks, just income minus expenses equals net profit. Two, S-Corps and partnerships is a little bit more complex. You may pay yourself a W-2, but the lender still analyzes both your personal and business tax returns. I know plenty of people out there are going to say, I pay myself 120 on a W-2. It's a W-2. But then we look at your business return and your business lost $75,000 last year. So did you really make 120? No, the business only had $45,000 left after expenses to pay you, and that's what the underwriter cares about. Now let's talk about the curveball, declining income. Maybe last year was great, this year was slower. Real estate agents know this all too well. If your income drops, the underwriter may want to know why and whether it's likely to continue to drop. This is where having a knowledgeable loan officer matters. A good LO prepares the story up front. Why the income dipped, why the business is still stable, what's expected going forward, and documentation to support it. I send a detailed email with every file explaining the income, the trends, and the story behind the numbers so the underwriters don't assume the worst. Because trust me, if you don't tell the story, they will assume the worst. Bottom line, if you're self-employed loans aren't simple. They're not cut and dry, and they need someone who knows how to break down your tax returns, present them properly, and advocate for you the whole way through. Whether it's self-employed or a W-2 borrower, if you want someone who can analyze your income, walk you through the process, and make sure there are no surprises, reach out to me. If a traditional financing doesn't fit your situation, we also have non-QM options, and there'll be more of that on further videos. Thanks for tuning in. There's a link below to contact me.